An offer in compromise is basically negotiating your tax debt down with the IRS and or state and local governments. So for a quick example, you owe $100,000, your financial situation proves to the authorities that the likelihood of you paying that amount back in full over a reasonable amount of time, probably 5 to 7 years, is very low. So they consider taking a lower offer against that amount as a final settlement. So that's basically what it is, agreeing on a much lower amount and then basically calling it a day as long as you comply with all these requirements going forward. I would definitely not consider offer in compromise as easy to get because it's a pretty much long, drawn-out process. You have to understand the IRS or the other authorities, state and local, they want to be very convinced that the likelihood of them collecting all the money is very low. They're not just going to wipe out any amount of debt, whether it's $5,000 or $50,000, if they feel that it's not in their best interest. So you really have to prove with various forms and financial statements, bank statements, supporting documents, that your financial situation is pretty bad, and then they consider you for accepting a lower amount. So you need to be very skeptical of these companies that say they can just get you an offer in compromise without doing much work or much review of your situation, because there's a lot of different steps in the process, and many different steps before you even submit the application to the IRS or state and local government. Anyone who promises you anything without seeing your financial situation is probably not being completely honest with you, and you need to be skeptical of those companies. You really have to have a consultation with someone, with a firm that has experience doing a lot of OICs, that have done a lot of OICs, and then make sure you go through all your documents, tax returns, financial statements, as much as possible before you actually pay the money and submit the application.